Here with the usual crew. I've got Eve and Chase with me today on the Bitcoin Treasuries Takeover. Thank you guys so much for tuning in. Make sure you hit like and subscribe here if you're joining us today, so you can join us every week, Tuesday at noon Eastern. We got a little bit of a late start today. I blame traffic for that, but we talk about this every show. You know, strategy is always the lead story, but I think we've got maybe a bigger story today, and that is Jack Mallers is out as CEO at 21. There's been some juggling on the strategic vision of what 21's doing. They're no longer acquiring Strike, but maybe Eve, I'll start with you here. Give us give us the news, and what are your initial takes? Upon hearing this kind of dropped this morning. Mallers is out. We've been waiting for 21 to do something for a long time. They've had some big teaser announcements, and this one's just another another announcement without it's different than the previous ones, but we still don't know exactly what they're going to be doing. But take it away, Eve.
Yeah, so we had Jack Mallers come out and say that he's stepping down as the CEO of 21 Capital, right? And Rafael Zaguri, who is the or who is the CEO of the Electron Energy, which is also a company that was about to be integrated within this 21 Capital kind of conglomerate, if I can call it so. Will be taking over as CEO. And yeah, so this is quite fresh news from today. And yeah, so first takes on this from my end is I'm actually happy to see Jack Mallers take a step out of this conglomerate, because it seems like it didn't fit him, right? According to what he was talking about. I think a lot of people are also happy to see that they're getting their boy back, because he's like one of the OGs, one of those kind of more cypherpunk Bitcoiners. So overall, I think at least on X, it looked like the mood was quite positive on that. And I also had friends texting me about it, the Bitcoiner friends that I've known for a long time, who are also a bit more cypherpunk, were quite happy about the news. And I think it's good for also the whole industry, just to have these moves as well, just in general, to see that there are still the Jack Mallers of this world who are not willing to play by the rules. Apparently there were some issues, or at least they weren't agreeing on everything with the board, and that's one of the reasons that he decided to step down. And I think also when you start thinking, and that's back when he was announcing the whole conglomerate. I think it was at Bitcoin Prague, where he was saying, hey, we're going to have Strike, and we have Electron, and whatever, kind of merging together. I personally wasn't so sure about the whole synergy of these different industry, well, kind of different operational businesses. So to see this happen, at least I personally am happy. On the other hand, I will say I'm not a shareholder of 21, because I also saw that based on the news, the stock fell now another 10 to 12%. I don't know where we're standing right now, but that's also not super positive, obviously, on the short term. But I think on the long term, it's definitely a right position. And overall, yeah, still big fan of Jack Mallers. I'm happy he's doing it. And yeah, I don't know what you guys think about it.
Yeah, I'll jump back in here, Eve. Yeah, interesting. I hadn't really caught the beat on Twitter, on X yet today. It's interesting that you said the response has been positive, kind of in your follows, in some of your circles, from the more cypherpunky crowd. I get that, I guess. Um, it's like a little disappointing, and I think 21 shareholders are probably a little disappointed because the stock traded down 10-12% pretty quickly on the news today. And that's an interesting cat, which we might get into that. That stock traded up, up on the announcement of Mallers backing this company, and Tether backing this company, and SoftBank being behind 21. It traded up, I think 6x from its IPO price pre-merger. Since Bitcoin's price has fallen about 50% from its highs, so too has 21 stock. After they completed their merger in December. But yeah, I've got a lot of thoughts about this, still processing it. I was really excited to both cover 21 and see what they do. The vision that Jack kind of pitched as this, Berkshire Hathaway type model, and a Bitcoin core focused business, that was going to spin out Bitcoin operating companies and selectively use M&A and generate cash flows and, do some interesting, mining activity with Electron, maybe some capital markets activity, maybe not in the preferred model strategy because Mallers has been under fire a little bit recently. Going after Saylor a little bit, just asking questions, as Mallers would say. So there's a tension there between him and the more like leveraged Bitcoin equity play or the amplified Bitcoin treasury strategy. But I was excited to see him kind of lead this thing because, like you said, I'll echo what you said. I'm a fan of Mallers. I think he's a great influencer for the community, for the broader Bitcoin movement. He comes from a family's background that has some really real deep institutional traditional finance connections, and so I was pretty excited to see what he'd be able to do, bringing Strike public through a potential transaction. But that's the other part of this news is Strike is, he's going back to Strike, just focused on building that, and they're not going to be going public, so we're not going to really get insight onto the profitability of that company. I'm certainly wishing him the best. Hope Strike does well. I love their product personally, it'll be interesting to see. Like I think having a guy like Mallers heading as CEO of a Bitcoin balance sheet company was really good for the industry, really good for Bitcoin, the asset, because I think Mallers is even though he does, come under fire sometimes, or there's controversy around him sometimes with things he says. I think he is broadly good for the ecosystem and just marketing for Bitcoin in general. So I'm a little sad on that front. But what's your takeaway, guys? Miller just hopped in. Chase, what do you guys think about Jack being out? I did see his announcement. I do wonder, I'm not going to speculate. I was just I was gonna get a little spicy and I wonder if this was purely his decision or if there were really diverging views because it had been previously announced that Raphael would be the president of the conglomerate. So him stepping in kind of makes sense, and I do wonder if the Jack stepping down was entirely his choice or not, and where the disconnect was. I assume we'll probably never know the exact, where the strategic breakdown came, but curious of your guys' thoughts.
I guess I'll jump in. Sorry about being late, everyone. Nice to see you all. It's been a very interesting day. I think, obviously, like you said, Tyler, Jack's a fantastic advocate for the Bitcoin space. He's done some great work over the years, and as someone younger in the Bitcoin space, I've learned a lot from him. So I've got a lot of respect for him, despite recent sort of disagreements with him, as you've already noted. The whole thing, the silence we saw, there was a lot of speculation on X the last few months about what is actually going on at 21. Obviously, we were all very excited in the Treasury space when they announced their sort of plans to be this next Berkshire Hathaway of the space. So possibly it felt like this was quite almost an unnatural fit for Jack, coming under a lot of fire for things. So it's good to see him at least take the decision himself. I won't say that fully, but at least take that decision to step back and focus on what works best for him and building Strike, which is a fantastic business in its own right. And of course, we've seen a couple of companies recently announced sort of jump into that Berkshire Hathaway sort of framing. Obviously, BSTR with Adam Back is eventually going to hopefully lay out his plans when they get that shareholder vote done. and also, of course, as I'm sure we'll discuss, Lyn Alden's new company. So there's lots of exciting moves in the space, anyways. And yeah, it'll be interesting to see how 21 take things now. Jack stepped back, but overall, fantastic for Strike as a business to have Jack back, fully focused, and where he works best. And yeah, definitely need a bit more time to digest things in terms of an analytical point of view. But at face value, fair enough to him, and it's good to see him being transparent.
Do we know if Strike will still be part of this conglomerate, or if Mahler's being removed or stepping away as CEO means Strike is no longer part of this deal?
Yeah, 21 did announce that Strike's not going to be part of this deal. Yeah, that seemed, Jack, was listed as a co-founder of 21 as well, alongside Tether. Obviously, Tether has, the controlling equity stake, and they bought back even more of that equity stake from SoftBank when they exited in May. But they did announce that Strike wouldn't be part of this conglomerate moving forward.
Yeah,
I've got, again, speculating. I wonder if Jack also got bought out of 21, but that's all just pure speculation at this point.
Yeah, so it's interesting. Like this was kind of a three-headed snake at one point when it was Tether, SoftBank, and Strike, and that was really what made it seem so compelling in the space. You've got the capital, you've got the massive operators with Tether, and then you've got kind of the media and consumer-facing brand with Mahler's, and we first saw SoftBank pull out, if I'm correct, and now we're seeing 21 pull out. So yeah, I would say this company is absolutely in some level of disarray. I would also kind of call out for anybody that is an operator or an entrepreneur that this is a lesson. I've been a CEO, founder, and chairman of the board, and I've been CEO, founder, and not chairman of my board. And it makes a big difference. I mean, you can take the CEO job and feel super aligned with the board. But a company is, nothing if not a series of pivots and innovations and iterations. And so at a certain point, the board may disagree with a direction that you want to go. And if you aren't, feeling like you can wear that on your chest, it's really hard to be a CEO operator of a company if you're, executing on somebody else's idea for the company's future. And so it is interesting that Mahler's put himself in this position in the first place as somebody who clearly takes pride in being the decision maker and kind of a self-sovereign CEO operator. I think that will probably be his biggest takeaway, but it should also be kind of just a big takeaway to anybody in the space that wants to work or build Bitcoin businesses. Like if you think you're passionate about building your business and you're passionate about Bitcoin, all the more reason to just do it in a way where you are the decision maker. And whenever the CEO co-founder is not like the way he presented this in his video was that there were disagreements with the board. When you have a true CEO founder led company, there is no disagreements with the board. Like you might have a disagreement in your head as you're playing out scenarios, but then when you act, the company acts. So in some ways, I think Mahler's might have just dodged like a 4 or 5 year stressful experience by getting out now ahead of, the SPAC converting. So, good luck to Mahler's and team. Good luck to what's left of 21. But, we take for granted sometimes the self-sovereignty aspect of Bitcoin, the protocol, and our ability to participate with that. But once you start layering on businesses on top of it, governance is incredibly important. And I think that really shined through today. And one last thing is this does to me kind of highlight the benefit of strategy and Saylor's team that has been in public markets as a publicly listed entity for 25 plus years, whereas we have a lot of kind of upstarts, smaller companies trying to go public, trying to SPAC into the public capital markets and kind of bumping their shoulders and elbows along the way, figuring out how to operate at that scale and with that level of kind of clarity and governance and alignment. So to me, that also shines through a bit today.
Yeah, definitely. This is one I thought it would work out. Even standing on the other side of this with Maller's out, given I'm sure this like was years in the making, because Mallers and Paulo at Tether are, Paulo's the CEO of Tether, of course, for anyone who may be living under a rock. But they've got a long history together. They're reportedly close friends. So this is something that I thought they probably have talked about, teased for years. I think it was a really good opportunity for Strike to go public, and that's probably again. This is totally editorial. This is a lot of speculation from my seat. I'm not playing journalist here. I'm sitting on chat with my friends, but I think this was like. Mallers probably saw this as a big opportunity to finally take Strike public, to really get behind the Bitcoin as money thesis, and build a business that not only treasured Bitcoin but built the ecosystem around it. Like obviously with Tether being the heavy hitters they are, having that company and that capital and that reputation behind you in public markets could have gone a long way. And Chase, your points are incredibly valid, and it's better this happened now than a year, 2 years down the line, once 21 started getting more active in public markets. I do wonder, like, where do they go from here? What is the play? Is Electron just going to be, is the mining operation going to be a big part of this? They did reiterate in their press release as well. The strategic vision is still to be the Berkshire Hathaway of Bitcoin, and to produce operating businesses that are cash flow positive, and then sweep that money into Bitcoin. That's what Tether does, right? A lot of their backing of Tether is with Bitcoin. Certainly they own a lot of treasuries to back their stable coin, because they have to, because of Bitcoin's volatility. But the play from Tether from the get-go, it's founded and started by Bitcoiners who saw an opportunity that stable markets provided. And they are operating offshore. So like, one thing I speculated at the beginning of this announcement last year was like, is this like Tether onshoring and coming to the US, as we saw maybe a move towards more regulatory clarity? But it seems like I was far off the mark with that. I'm sure Tether's really happy operating offshore under a different regulatory environment. So I do wonder what is the strategy from here. It's been a year since this announcement, and we've been waiting for more and more for 21. Do any of you guys have speculation on where 21 could go from here? Is it how investable is the business? Just again, sitting from our analysis, our chair, without them having done anything for a year. Is this just a function of the bear market? I'm sure if it were bull market, maybe things would be different from where we're sitting right now.
Yeah, that's a very good question, and I think this is something that we've been wondering already with 21, but there's also other companies, because they've been moving fairly slow, right? I mean, you look at a Strive, they've been aligned from the get-go. These guys have been like in one big brain, basically. All together, it's like one big brain, same as strategy, as Chase pointed out, right? They know exactly where they're going, and they're moving extremely fast. So this is kind of a precedent to start thinking, okay, what other Bitcoin treasuries are moving that slow? And is it also due to some maybe clashes between their management and their boards, and what's happening on the governance, right? Because that's a very important part. And there you can see how easy a Bitcoin treasury, and you think, oh, having a Bitcoin treasury is probably one of the easiest play, or at least it was in the summer of 2025, but now you can see how easily it can fall apart, right? Just doesn't take that much, and we've seen many others fall for different reasons. But the short term, I think, is going to be quite brutal for 21. At least that's how I see it right now, because now they obviously now have a new leader with Raphael from Micron, but does it have all the support from the Bitcoiners? I mean, Jack Mallers was a very, very big personality in the Bitcoin. He is a Bitcoiner and a Bitcoin's personality, right? So you can't replace that overnight. And I think it's going to take a lot of time for 21 to take the hit and start showing, hey, we have a strategy that works with what we're planning to do, and now it has to go without Malers and Strike as well. So Strike, I believe, is also a big company, a big company name in the Bitcoin space. So at least from the Bitcoiner support, I see maybe a little bit of gap now that they need to shorten in order for that to, or like a bridge to the Bitcoiners that they probably need to have. On the TradFi side, I don't know so much how well Paolo and all the Tether guys are already affiliated. I mean, this was also with the Counter guys, right? The SPAC, so maybe they also have some people there. But just in general, at least from the Bitcoin perspective, I see that they might struggle a bit more than with Malers on board. And obviously that's short term, who knows mid-term and long term, but that's a bit how I see it right now.
I think one other thing that's worth calling out, since this is kind of the Bitcoin Treasuries takeover, and the four of us here, we're all very fascinated with how business and corporate entities kind of layer on to the Bitcoin protocol. It's worth calling out that when people criticize buying Bitcoin Treasury companies' equities, one of the things they call out often is operational or executional risk. And this is very real. Like, sometimes the conversation shifts to it's too much leverage or it's too much dilution of the common equity and these types of things. But at the end of the day, those are all just kind of different flavors of operational execution risk. And when governance issues like this, or the inability or a failed attempt to go public or change in leadership, all of these things are different various flavors of operational risk that exist with Bitcoin Treasury equities, but that do not exist with the Bitcoin protocol. And so, that is to me always the biggest warning label that I like to slap anytime that I'm mentioning purchasing MSTR common equity. Now, in the case of Strategy, I think there's much less operational risk because they're a proven publicly listed entity for 25 plus years. So strong track record, strong kind of operational excellence behind the scenes there of how to kind of operate at that level and SEC regulations. But also the model is less of an operating business. So one of the things about 21 is that these were all meant to be kind of a conglomerate of different operating companies. So you can kind of think about it as kind of compounding operational risk in that sense. Whereas with Strategy, yeah, there's a business intelligence business that's basically just kind of on cruise control. It's hardly even relevant to the market cap of the company these days. And the real risk of the company is just, are they pulling the right lever at the right time based on their internal models? And to me, that is kind of the optimal mix of limited operational risk while still benefiting from a business layer 2 on top of Bitcoin. Whereas I think that the flaw in the 21 Capital and the risk that I see to something like Lyn Alden's new orange juice is that you are layering on operational execution risk that, yeah, maybe there's incredible value if it works to using free cash flow to buy Bitcoin instead of diluting common equity or taking on dividend obligations with preferreds, et cetera. But that operational risk is like what makes it so that 99% of startups fail. It's the operational part. It's not that they have dollars in their treasury or they raised capital and it diluted their company by 25% in their seed round instead of 15%. That's not what kills startups. It's the operational lift. It's really hard to run a company, especially if there's not alignment on governance and kind of a clear founder-led decision maker. So operational risk, like this to me is the day that Bitcoin Treasuries takeover should remind people, like, yes, you're taking on operational risk. Some of these Bitcoin Treasury companies have more operational risk than others. And that should honestly be one of the things that is a much bigger part of the conversation instead of just like Bitcoin yield or Bitcoin per share day to day.
Yeah, massively agree with you there, Chase, overall. There's not much more for me to say, but I sort of building off of what Chase was saying, I think that is something we really overlook, is, well, what are the cons of buying treasuries as opposed to just your cold storage Bitcoin? Of course, treasuries have that level of ownership risk, which Bitcoin doesn't have. And that's often one of the big reasons why we love Bitcoin as an investment. It can't be destroyed by a random press release, by potentially a CEO stepping down, etc. And I think we've really seen the effect and the risk of that today, and probably I agree with the other points made, but we'll probably see it in the near future. I think when I last checked a couple minutes ago, 21 Capital was down about 11.5% today. So we're really seeing the effects of it now, and I can really only see that keep going. I think probably the best thing to happen for 21 right now is for the new management, the new CEOs to come out very quickly with a sort of new vision, a new plan, which is sort of setting out the foundations and the pillars of the company now before the market sort of takes too much control over the narrative. So yeah, overall, Chase, really think that's a great point there in terms of that ownership risk we do take on investing in treasuries, and something everyone should be aware of.
Yep. Yeah, I think well said. You did touch on Chase orange juice, which is, some fresh news we also got this week, freshly squeezed, but which is a another conglomerate type Bitcoin treasury company, if you will. Again, with that comes with operating risk, like you guys outlined. So Lyn Alden's backing this. Author of Broken Money, as I've usually got her book on display here. Great book. She's a great influencer and analyst, I think, not only in Bitcoin but in the macro space in general. And so she's co-founded this. They're planning to acquire cash flowing businesses, support operations, and then back a portion of those cash flows into a Bitcoin treasury. I think you need scale for a company like this to work, and operators who are really good at building a conglomerate, building a portfolio. Like, there's a reason Berkshire Hathaway is unparalleled. They don't have real rivals. There's a few other conglomerate companies out there doing similar things, but they've usually got like a really long track record and massive capital at their disposal. So that was announced just this past week. And it's being seeded with money from Ricardo Salinas, who's a famously a Mexican billionaire who he's talked in the past about his allocation to Bitcoin and Bitcoin companies being 70-80% of his entire net worth. So he's certainly a Bitcoin maximalist, and I think a great spokesman for the proposition of Bitcoin as an alternative to fiat, and just better money. So yeah, there's $40 million in initial funding behind that. Interestingly, Salinas does have experience in this. He he headed a company, or still heads a company in Mexico that has been really successful, a multi-billion-dollar company that does have many operating businesses in media. I think there's a radio company, TV company as part of their portfolio, and seemingly has produced solid cash flows over the years. But yeah, I just wonder about scale. Obviously, we don't have a lot of info into what exactly the initial investments might be with the seed money. Lyn Alden does have some experience in the VC world. Ricardo Salinas obviously has money backing startups and Series B, Series C funding for later stage companies. So one of the quotes I'm just pulling up from the Bitcoin Treasuries tweet, Ricardo said, "I've learned two things: cash flow is king, and you cannot count on governments to protect the value of your money. That's why I'm backing this team." So yeah, it'll be interesting to see what Orange Juice does. And Yves, I'll pass it over to you. Do you have thoughts on this? I mean, it's certainly interesting. I think we all love Lyn Alden and her work, and it'll be I think fun to monitor what this company turns into.
Yeah, I mean, it was also an interesting news when it came out, at least for me, because we're starting to have new entrants now again on the Bitcoin treasury side, right? Despite the bear market, or are we getting into a bull market? Question mark here. yeah, so it's great to see that there's again some interest, and looks like they've been monitoring the Bitcoin treasury space, because they seem to emphasize a lot on this cash flowing, right, and the operating business and the need for that. And I have to say, I'm a big fan of Lyn Alden, Jeff Booth, Nico Lechuga, with what they were doing already at EgoDeath. So I'm super excited to see what they come up here with Orange Juice. But the question mark, and this goes back into what we were talking before, right, is that now you're looking at potentially having many different operating businesses under one umbrella, right? And it's not the same as saying, hey, we have our digital credit and BI AI business like Strategy does, or you just have your kind of more asset manager and digital credit like Strive has, right? So suddenly, like you hear, and it seems like they will be acquiring quite a lot of small businesses, because they mentioned that they will be looking at 1 million to 10 million annual cash flow, or around that range, right? Businesses. So that tells me that they're probably looking to acquire somewhere between between 4 to 40, depending on the price. I don't know, but regardless, it seems that they don't have a specific direction as well. So it could be anything, right? And if you diversify a lot, we've been talking a lot about Berkshire Hathaway, but there's also some other companies that were doing that, and that didn't work out so well, at least. Like if you think of GE, you know, the big conglomerate, right? They had to split up recently as well. So it's not always like the successful stories. So we will also need to remind that there are risks with having different types of businesses, especially if they're very diversified. I think people need to be a bit more the specialist in what they're doing, right? So that's one of the things. And interesting enough, I think that one of the themes of this talk, and one of my latest talks also with Adrian Morris, is operating business. We're in the depth of bear market. I think that's definitely something that's interesting, and would love to have your thoughts as well on this, because potentially we could see a resurgence also, not just on Orange Juice, and obviously we're talking about 21 before, but potentially Strategy as well, right? What if they push a bit more their BI AI business? And that's something I would be really keen to hear your thoughts on.
I don't think anybody cares about Strategy's BI business, and I think Saylor has kind of made that clear. He's talked about how he used to do the rounds for 6 months a year, flying all over the place, talking to people about the BI business, and nobody cared. And then he got into Bitcoin, and now they're one of the most well-known, most liquid, most traded stocks in the world. So I don't think there's really any looking back there. I think they've tried that for 25 years, and they've tried this new thing for the last 5, and it's pretty clear where the media product market fit is in terms of being able to capture the world's attention. And to that point, we see this educational hurdle with Bitcoin treasuries, the equities, and that's what we do here on this show, and what BitcoinTreasuries.net tries to bring to life with the data and the metrics on their dashboards. There's an educational hurdle in trying to explain Bitcoin. Like, we know that hurdle. Most of us here, we've overcome it, but we know that that's like a multi-year process. And then to really dive into Bitcoin treasuries, just the simple kind of carry trade type treasuries, that's another huge educational hurdle. What scares me about something like Orange Juice is the educational hurdle of asking people to try to do research on the individual companies inside of that conglomerate. Because if you're going to buy that ticker, you want to have a sense that you've done your homework on at least 90% of the companies that are made up inside of it. And if those are all in various different industries and different sizes, run by different leaders, that's like a terrifying educational hurdle to overcome. In terms of like trying to get investor participation and clarity and conviction amongst that investor base to buy and hold for the long term. And then another thing that comes up, and maybe this is like something I can bring to bear in this conversation, is what I kind of refer to as founder flight. So if Lyn and team acquire a small private company, well, now they are kind of the governing body, similar to what we were talking about at the top of the show, with kind of Tether being in charge of Strike in that scenario, if that deal were to have come together. Well, that's the next thing you see is founder flight because now the founder is kind of taking marching orders from the top. They're no longer feeling the passion and the love for the business building that they once did. They've kind of already had their liquidity event or at least a clear path to the liquidity event over vesting. And so you tend to see founder flight. And if we've learned anything from kind of the tech era here, it is that founder-led businesses are much more successful and that the day the founder leaves is kind of the day that the business starts dying. And that is another concern with this type of business model where you take successful private companies and you add them to a large conglomerate and they get that liquidity event. And then last but not least, the concern here is it's just not an infinitely scalable model. Like Lynn is limited by the number of incredible operators that her and team have on hand, limited by the number of great businesses out there that either want to be acquired in this rather than staying private, which is just a solid outcome in its own right. And so that to me is like a huge difference between this type of M&A versus strategies M&A. So strategy is in the business of M&A, but what they like to say is we have this infinitely acquirable good called Bitcoin that we can buy at any size and does not increase like operational risk with each new M&A transaction. Whereas in this scenario, yeah, maybe these companies have some Bitcoin on the balance sheet. I don't know if that's even part of the M&A targeting here. But you just can't just go around buying operating businesses all day long because if we think about dilution in terms of strategy, if they make a dilutive transaction to Bitcoin per share 1 week, okay, that is a known outcome. But if you acquire, let's call it 5 businesses per year, small private companies like this, but every year one of those goes bust, have you undone all of the things that make holding your equity more accretive or potentially more outperforming than just holding Bitcoin itself? With strategy, you don't really have that. It's one entity and it holds Bitcoin and nothing dies on the balance sheet over time. But if you're creating a conglomerate of small previously privately held operating businesses, you should bake into that maybe once every 5 years, one of those companies gets killed by AI or a competitor or has key man risk and the founder leaves and a bunch of the key founding team members and staff leave with it and the company kind of gets put on ice or has to be sold off for parts. So I just think there's so much to me it's like layer on layer of operating risk that even though strategy is an operating company, you just don't see that. They've removed those types of operating risk.
Yeah, I think it's a really good point too about the types of companies that they're going to be targeting. They said, just taking a look at the article here on the website, they said they're going to be targeting stable businesses that are generating $1 to $10 million in annual free cash flow. And like you said, the private companies that are doing that, um, you've got to find a perfect storm. They're few and far between the ones that are willing to get acquired, that have a stable business that can operate either without its founder or with its founder remaining engaged and motivated after they get have this liquidity event and are suddenly far more rich than they were the day before. So yeah, I think that's definitely a risk, and I do just like I think from the investability side of this thing, they've said they're going to look to go public, starting a private at first here, but I assume it's going to be a SPAC deal. If I had to speculate rather than an IPO, just due to the cost of that, for such a small company. But yeah, for investability, you've got to be really sold on the team behind this, right? And yeah, Bitcoiners love Lyn Alden. I think she's extremely intelligent. She knows Bitcoin, certainly knows the value prop of a Bitcoin balance sheet. Like I said, she's had some VC background. I can't speak one way or the other to the success of Ego Death, but just assuming they've been successful, maybe the investor is really excited by Ricardo Salinas being backing this company as well, right? I think anytime you're talking about a company that's smaller in scale on the Bitcoin treasury front, the value prop is, hey, what's the difference between just buying spot Bitcoin or buying strategy if I want Bitcoin type exposure. And a conglomerate type company like this, you've got to really, like you said, if you're able to do the due diligence behind all these businesses, great, and you have confidence that they're going to generate a lot of cash flow. I do wonder about the scale. $40 million to start in capital. Um, what's the upside on that type of thing? And it could be sky high. They could be really good at this. But you're really investing in the team, right? It's less about the actual. I guess it's less about the type of company they are, and that they're like kind of unique in the Bitcoin space, in going to public markets with this strategy. But it's really investing in the team if you're looking to allocate money to this in public markets.
Yeah, well, it's still early days, of course. There's so much to clarify going forward. Lots of innovative stuff here. Obviously, with that innovation, with that sort of forward-looking perspective, as we've already discussed in today's chat, there's that massive operational risk in terms of, at the moment, obviously, there's a lack of clarity, like I said. So, okay, how are they going to do this? For example, I'm looking at the article now. I've been having a little scroll through it as we've been discussing. They've sort of discussed about how different market conditions, they're going to focus more on the business side of things and then more on the Bitcoin side of things. Well, question is, how easy is it to shift between that? How is it to sort of invest in businesses in the long term, as they've said in that Berkshire Hathaway sort of model, but then be able to react flexibly in the short term to market conditions? I think there's a lot of questions still to be had. Of course, fantastic founding team in terms of the names we know, but at the moment, yeah, a lot left to have a look at. And I think sort of going forward, in terms of looking at the wider ecosystem, I feel like on the point of strategy, I feel like strategy of their first mover advantage really have quite a unique position where that core operating business doesn't really account for much, like we've already said, because at least in my opinion, Strategy's business is capital markets now. Like, they are the company which creates, of course, innovation through capital markets. And I like to sort of look at them as this Leviathan company, where they are the dominant company in capital markets. They can innovate. Look how easy they could raise cash, for example, by selling their stock. How they could just sell Bitcoin onto the market and it not really have an impact. Like, they've got the flexibility now because they've got that first mover advantage, which then obviously gives them the size. So I guess that's the sort of way I'm looking at strategy going forward. I just see them sort of just remaining dominant because of that position they're already in terms of, well, will they expand their operating business? What can happen? Maybe. And it would be really cool to see, because obviously as they grow as a company, as Bitcoin returns, in terms of the sentiment, etc., it'd be cool to see if there's more of a, I guess, focus put on the core operating company alongside the Bitcoin treasury. But overall, I think in terms of the treasury itself, and Lyn's company, I think there's, as I've said, lots to clarify, lots to get through. But I'm sure we'll hear from that in the future.
Yeah, definitely. Before we wrap here, we're coming up against the top of the hour, but we've got to talk strategy a little bit more. This week, same thing. Like you said, Miller, they sold their stock. Their stock's been up this week. They raised $263 million. So let's see where that puts us. They're at 22 months of dividend coverage, coming up close to that magical number of 2 years of dividend coverage that a lot of us have speculated might be right. Chase says double that, make it 4 years, get through a whole cycle with cash on the balance sheet. But what do you guys make of strategy, pausing the Bitcoin buying still and stacking cash? I mean, we've talked about it at length, maybe ad nauseum. But 22 months of dividend coverage. Michael Saylor heard the feedback, listened to the markets, and is rebuilding that cash fortress.
Yeah, I think not much new to say, but I think it's all about, again, getting STRC back to par, right? And if adding to the cash reserve helps, then they should definitely go for it. And yeah, apparently they're gonna keep raising and see how the market reacts as well. I think on the news yesterday, STRC went up a little bit, same as MSTR, but I think it's also due to Bitcoin prices also going up, so hard to tell. But it looks like in general the market is taking it well when strategy is still raising the cash reserve. And question will be what to watch, until which threshold will it be enough, right? Because I think at some point it becomes also detrimental not only to the shareholders but to just the whole operations to just have way too much cash. But again, these are my thoughts. I know Chase, as you pointed out, likes a lot more cash, so yeah.
Tyler, can you go back to strategy.com for a second, the dashboard there? Yeah, so here's what I think is interesting and kind of highlights in a day like today how much nuance there is in the model itself, yet how little nuance there is in the discussion online about this company. So for example, you've got strategy which diluted, according to, bears or naysayers, diluted MSTR common to raise cash, yet MSTR common is up and their MNAV expanded. So how does that make sense in according to the bear thesis where, MSTR shareholders are taking the hit for all of these types of transactions? Well, it makes sense is because the shareholders do still have exposure to that cash that was raised. Now, yes, would MSTR shareholders prefer being exposed to Bitcoin, the appreciating asset, over cash, the depreciating, debasing asset? Yes, of course. But they do still have exposure to that value on the balance sheet, and that value on the balance sheet is one of the three things that the S&P credit roadmap provided to strategy to improve their credit rating was given. And just to reiterate those things, it was improved dollar liquidity, which we're seeing them do by increasing their USD reserve to all-time highs, reduce their reliance and existing converts, which they did by retiring a tranche of converts, and whether or not strategy would have access to capital markets in moments of stress, aka a Bitcoin bear market. Check, check, check. Yeah. So, like, guys, they're just following. It's like they have a homework assignment. Okay, you're given a homework assignment strategy. Go prove to us that you can improve dollar liquidity, reduce reliance on the converts, and maintain access to capital markets in moments of stress. Check, check, check. Like, if you don't think that strategy is a stronger company coming out of this bear market, then I mean, we're just not looking at the same company. And if you really think that the company, issuing shares to raise $260 million of cash, that is somehow only dilutive to MSTR shareholders as opposed to MSTR shareholders still having exposure to that cash that was raised, like basically one for one, if not better because of the premium to MNAV. Like look at today. MSTR price is up, the MNAV is up, and the credit quality of the company is stronger than ever while they go line for line addressing the concerns that the S&P needs to see before providing them with better credit ratings, which increases their ability to access pools of capital, which increases the amount of money that they're able to raise to buy Bitcoin, which increases the amount of money going into the Bitcoin market, which increases the scarcity, which increases price. Like, this whole thing is really just pointed in one direction. It's built to survive the bear and outperform in the bull. And naysayers can run their victory laps right now, but I would say it's a very dangerous prospect to be betting against strategy going into the next 24 months.
Yeah, yeah. This basic chart of strategies, price versus their volume, just has me so bullish. And not to beat a dead horse, but like I've talked about it a lot, and you just alluded to it as well, Chase. I mean, the fact that they've been able to keep this volume up through the bear market, you just see like, yeah, it hasn't had the major spikes that you saw in 2024 and 2025, peak bull market, or you're, on the other end of a huge rip in Bitcoin's price. If you're a bear sitting there and looking at this chart, I just got to wonder, like, these guys have probably been perma Tesla bears as well, right? And just don't understand the power of volatility in capital markets and the ability to raise money, to attract capital. Yeah, it's super bullish. Obviously, Bitcoin's price was down 33%. Strategy was down 50% in the last couple of months, but yeah, that's because it was the end of the world, and STRC suddenly couldn't raise $2 billion in 2 days, which we know it's just going to keep coming back as the balance sheet grows stronger, as they improve their credit quality, not only in the eyes of rating agencies, but investors, at large in the marketplace, institutional investors. So really bullish. They're part of the NASDAQ 100. There's going to be a permanent bid on the stock, a permanent volatility baked in, not to mention, when Bitcoin runs either way, there's going to be a lot more shares traded. Super bullish. Thanks, guys. We ran over our time a little bit, but thanks to everybody who popped in the chat, watching on YouTube and X. Make sure you subscribe, follow Bitcoin Treasuries, follow all these guys on Twitter. They're tagged in the video and on the tweet as well. And leave a comment, share this with somebody, and we'll see you next week on the Bitcoin Treasuries